What is a bubble? Let's say a person buys the new iPhone 17 for $1, even though that's impossible. For argument's sake, let's just say it costs $1. The person likes their new iPhone, life is good, and they are happy. Stores person say the iPhone is rare and the best on the market. People start believing it will cost more tomorrow, so buying today feels like the smart move. So the store person buys extra iPhones, not to use them, but to sell them later for more money. The next day, the iPhone cost $2. Now people start buying the iPhone just to sell it later for a higher price. The iPhone now costs $5. People are buying and selling quickly. The iPhone now costs $10. People start hoarding the iPhone, not to use it, but to sell it later. The iPhone now costs $20. iPhone mania begin.
Who wants an iPhone?
I'll take one. No, two. No, three.
Sold!
Now, people are flipping the iPhone constantly. A full iPhone is unaffordable. People can barely afford a fraction of it. Look at the price chart. It only goes up. Everyone is told to buy the iPhone. Nobody wants BlackBerry or Nokia anymore. Everyone becomes an investor. The news gives investment tips. Breaking news! The iPhone is rare and valuable. Online creators also make endless videos about it. The iPhone now costs $2,000. Why do prices keep going up? People have FOMO, the fear of missing out. People worry that if they don't buy now, they'll miss the chance to sell later at a higher price. Most people don't actually understand why the price is rising. They just don't want to be left behind. How did you afford that? I bought iPhones early. I should have bought iPhones earlier. People also have herd behavior. People love to copy each other. If many people make the same decision, it feels correct, even if it makes no sense. People see others buying, so they buy too. Everyone believes the price can only go up, which creates a loop. So people buy iPhone, which make prices go up. So people buy iPhone, which makes prices go up. So people buy iPhone, which makes prices go up. Why banks make the bubble bigger? When people see prices rise, some people take out loans to invest even more. This is risky. If iPhone price goes up, people make more money. If the price goes down, they can lose everything and still owe the bank. People start buying more than they can afford. This is called leverage. Okay, I'm going to explain leverage like you are 5. If someone buys 100 iPhones for $100, iPhone price goes up 10%. The iPhones is now worth $110. That person put in $100 and now have $110, which is a 10% gain. But if price goes down 10%, the iPhones are now worth $90. That person put in $100 and now has $90, which is a 10% loss. Leverage is when someone buys 100 iPhones for $100, but only uses $10 of their own money and borrows the other $90 from bank. If iPhone price goes up 10%, the iPhone is worth $110. They still owe $90 to the bank, so they now have $20 left, but that's a 100% gain on their $10. If the iPhone price goes down 10%, the iPhone is worth $90. They still owe $90 to the bank and their $10 is gone. They have $0 and now in debt with the bank. Do you understand? Now, leverage basically lets people use the bank sleeves to make bigger investments, but it's a dangerous game because iPhone market doesn't need to crash. It just has to wiggle or move a little, and people can gain or lose everything. Why do leverage make the bubble bigger? People think they are investing genius, so when iPhone prices rise, people take out loans to invest in the iPhone market. People borrow money to buy iPhones. Then price rises further. Then people's iPhones are worth more money. People borrow money to buy iPhones again, so iPhones are worth more. Basically, the iPhone hype is the bubble, and the cheap loans are the air pump to the bubble, making it bigger and bigger. And eventually, iPhone becomes unaffordable. That's a bubble. A bubble is when the price of something goes far beyond what it's actually worth. People are buying iPhones only to resell them, not to use them. How did the bubble pop? Reality hits. People realize iPhones aren't actually rare anymore and are not the best in the market. People start panicking. Everyone tries to sell at the same time. The news changes tone. Breaking news: iPhones aren't that valuable or rare anymore. Prices dip fast. People who borrowed money are forced to sell to repay loans. That pushes prices even lower. Prices drop from $2,000 to $100 to $20 to $10 to $5 to $1 to eventually less than $1. People panic even more. Please buy my iPhone. Ew, no, who even wants an iPhone nowadays? Why did I put my life savings into iPhones? I need to get out. Sell, sell, sell. Some people escape. Many are stuck holding iPhones nobody wants. The 4 stages of a bubble. The discovery. New thing comes out. Everybody is excited and hyped. The boom. Everybody buying this new thing. The mania. Everyone thinks buying guarantees that they will make a lot of money and be rich. The panic. Reality hits and prices crash. Bringing it back to real life. Right now we're seeing the same pattern with AI. AI is called revolutionary. AI is called priceless. Money is pouring in, not because AI is already making huge profits, but because people believe someone else will pay more later. Many AI products don't make money yet. Some don't work as well as promised. But the hype keeps growing. People are afraid of missing out. They copy each other. And everyone believes AI can only go up. AI may change the world one day, but when hype moves faster than reality, bubbles form. And when that gap gets too big, bubbles pop. We're seeing the signs now. Like and subscribe if you enjoyed the video.